demand shift, crypto innovation and global capital flows. Plus, in our deep dive, we'll unpack why India's central bank just hit pause on rate cuts and what that means for one of the world's fastest growing economies. Welcome to Finance Pulse, and here are the top headlines of the day. In Washington, the federal government has officially shut down for the first time in years after 11th-hour negotiations collapsed between lawmakers and President Trump. Talks broke down later Tuesday night, and both sides have since focused less on compromise and more on assigning blame. Efforts to pass stopgap funding failed twice in the Senate, first with a Republican proposal, then with a Democratic alternative, leaving agencies without the funds needed to operate. The shutdown will halt many federal services, furlough hundreds of thousands of workers, and inject new uncertainty into markets already on edge over slowing growth and stubborn inflation. Economists warn that the longer the impasse drags on, the more damage it could do to US GDP in the final quarter of the year. In the private sector, a Trump-linked financial startup is betting big on mainstream crypto adoption. World Liberty Financial, a digital asset venture backed by the president's family, announced plans to launch a new debit card by the end of this year or early 2026. CEO Zach Witkoff says the card will allow users to spend their crypto holdings on everyday purchases, effectively bridging digital assets with the traditional banking system. A pilot program is expected in the next quarter. And in sovereign finance, Kuwait has made a high-profile return to global bond markets for the first time in 8 years. The Gulf state raised $11.5 billion in a three-part dollar issuance, with strong demand allowing it to tighten pricing across all maturities. Now to our deep dive, and a major monetary policy call from one of the world's fastest growing economies. India's central bank kept its key policy rate unchanged at 5.5% this week, in line with expectations as it gauges the impact of earlier stimulus. Inflation has cooled sharply since the start of the year, but growth risks are building as global trade weakens and new tariffs from the United States weigh on exports. Governor Sanjay Malhotra said the effects of June's large 50 basis point rate cut are still filtering through the economy, and policymakers agreed unanimously to pause further action for now. Standard Chartered economist Anubhuti Sahai said this wait-and-see approach is likely to maximize the impact of earlier easing while preserving room roughly 25 to 50 basis points for possible future cuts. The Reserve Bank's growth outlook remains solid. GDP is forecast to expand 6.8% in fiscal 2026, with quarterly growth expected to moderate slightly after a 7% surge in the current quarter. Inflation is projected to average 2.6%. But there are external headwinds. US tariffs on Indian goods, imposed in retaliation for Russian oil purchases, now reach as high as 50% and are hitting key labor-intensive sectors like textiles, jewelry and seafood. To counter that, New Delhi recently cut goods and services taxes on several consumer items to boost domestic spending ahead of the festive season. These moves matter because consumption drives more than 60% of India's GDP. Analysts say the tax cuts will soften the blow from trade tensions, though sustainable growth will depend on stronger job creation and investment. Goldman Sachs has already revised up its 2025 growth forecast to 7.1%, citing better than expected second quarter performance. India's monetary strategy reflects a delicate balancing act, one that prioritizes long-term stability over short-term stimulus. And as global headwinds grow stronger, that caution may prove to be its biggest asset. That's all in Finance Pulse for today. Follow the Finance 360 for more updates.